I am Neha Vashisht. You're watching ET Markets Live. A lot is happening in the markets right now, and in this episode, we are going to talk about what's really happening and how you should approach the markets right now. Joining me today is Kranti Batini, equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets Live.
Thanks, Neha. Thanks for inviting me on your show to share my market views with you and with all the viewers of ET Markets. Thank you.
Well, the pleasure is all mine. So let's start with the Indian markets right now. So Indian markets have been hitting highs lately. Do you see this momentum sustaining in the near term, or are we due for a correction right now?
Neha, if you see the entire how the things are evolving in the last 1 month and all, we had a
Mm.
downfall in the market for a consecutive of nearly 11 to 12 trading sessions after meeting the
Yep.
after the market went to the range of 24,500. From there onwards, we witnessed a vertical rally of around 1,000 points on Nifty. So
Mm.
there are a couple of things that are helping the markets to sustain the level of 25,000 level. The one thing is the last fortnight back, the GST rationalization, GST 2.0 definitely helped the markets to come into a positive territory. And that helped the market to come to the range of 25,000 level of Nifty. From there onwards, the
Mm.
positive indications have been with respect to the cordial relationship that's again building up with respect to the tariffs, which has been the key concern for the entire global market universe. They have been the things the war the war hangs on the market. They are getting slowly
Mm.
resolved. And last night we witnessed the complete shift in the relationship between US and India, that President Trump
Yep.
wishing our Prime Minister Modi on his 75th birthday. That also brought some kind of
Mm.
positivity in the market right now. So, by and large, markets need to sustain this level. But one of the key thing we need to witness is the foreign portfolio investors' behavior. In the month of
Mm.
August, they have been the net sellers continuously, but they have not become the net buyers at this point of time. Still,
Right.
they have been moving their cards very slowly. The From here onwards to sustain the rally, the FPA behavior is going to play.
Right. We are going to talk about FII flows and everything later on in our segment as well. But first, let's talk about today. So today is quite important because Fed is going to uh, announce its rate cuts soon. How do you see global liquidity flows impacting Indian equities and other emerging markets?
In terms of the global equity flows are concerned, in the last fortnight and all, to be as per the data and as per the sentiment of the market, we have seen a favored market in the emerging market space. Okay,
Hmm.
FPAs have been continuous net sellers thanks to the DAs who stand like a rock for these markets and could able to withstand the selling pressure of foreign portfolio investors, and they could able to absorb the selling. And right now the markets are above 25,000 level. So the foreign portfolio investors still they are in a wait and watch mode, because we had
Hmm.
a rub off effect of US and India trade relationships are concerned. Just a couple of months back, we were favored nation in terms of the tariffs are concerned. All of a sudden,
Right.
we are one of the highest paid tariff nation in terms of the trade relationship with the US is concerned, the 50%.
Hmm.
So that has been become a overhang on the markets. So that made the foreign portfolio investors and the global investors to become jittery on Indian markets. But right now, how
Right.
things are going to move with respect to the trade negotiations are concerned, that's going to play in the next couple of days time. So market is the foreign portfolio investors and markets are waiting for any kind of positive commentary from the trade negotiations and tariffs are concerned.
Absolutely. So, coming to FIIs, crude is cooling off and dollar is weakening right now. How do you think FII flows are shaping the market sentiment as of now?
As per the current, the entire the market, equity market universe, eyes are on what kind of decision the Federal Reserve is going to take. There was a initial commentary there would be a 50 basis points rate cut from Federal Reserve, but the
Hmm.
initial commentary what we are finding at this point of time, there would be a 50 25 basis points rate cut, because still for the US economy is concerned, the overhang about the tariffs is weighing on the inflation. So,
Hmm.
but so how the Jerome Powell is going to play his cards? In fact, he is caught between ice and fire at this point of time. He is at a point blank range from Trump
Yeah.
administration for a imminent rate cut. So his commentary is extremely crucial. So any rate cut that's going to be a positive for the equity market, and also that can give some positivity for IT companies, Indian IT companies especially, because of the US companies have been waiting for a rate cut. So that's the reason we witnessed some kind of a positive movement in Indian IT companies also in the recent past, despite of the pessimism and a negative sentiment in the market. So the cherry picking is taking
Hmm.
place at this point of time. So uh, the foreign portfolio investors definitely weighing on all these events, especially
Right.
the crude oil is one of the joker in the pack, which is in favor of Indian markets from quite a long time. But definitely the all the eyes are between the negotiations between the trade relation and a trade negotiation deal between India and US. That's going to play a key role when compared to uh, the the other parameters are concerned.
All right. Let's also talk about sectoral strategy at this point. IT and metals have led the recent rallies. Do you see this trend continuing in the near term, or do you think that it could shift to domestic sectors like banks or maybe consumption?
Consumption after this announcement of GST rationalization is concerned, we can see some kind of a uptick in the consumption and the domestic stories. But we can
Hmm.
see selective buying in IT, especially Infosys buyback has brought some kind of a positivity for IT stocks are concerned. Any kind of commentary with respect to US growth is concerned can be a overhang on the IT stocks in the medium to short term. So one need to wait and watch how the commentary is going to be. US growth numbers going to play a crucial role in terms of the IT
Hmm.
companies are concerned. So Federal Reserve
Okay.
rate cut can be a positive for the domestic banking and financial services, and also any surprise rate cut from RBI MPC also can create a positivity for the Indian banks and financial services are concerned in a medium to short term. Neha, we need to see
Okay.
by and large, okay, stock specific actions. Even though the Nifty has moved 1,000 points from 24,500 below,
Hmm.
but stock specific actions are going to be in this market.
All right. Let's also briefly talk about valuations and risks. At the current levels in the market, do you think Indian equities are expensive compared to its global peers right now?
Neha, in a medium to short term perspective, this valuation theory still always plays okay as a overhang on the market, uh, especially whenever there is a comparison that happens on Indian markets with respect to the emerging markets peers like China and other nations in the emerging markets pair. Of course, Indian markets are not cheap at this point of time, as and when
Hmm.
Nifty rises above the range of 25,500, the question of valuation do comes into the picture. But what we are lacking in the last couple of quarters has been building up the earnings momentum that has been slowing
Hmm.
down in the last two-quarter earnings are concerned. So that's where the markets are a little bit skittish in the medium to short term in terms of the valuations are concerned. If we have next couple of quarters the earnings positive momentum, that can give a positive outlook for the Indian markets. That is the reason, if you
Hmm.
observe, last 1 year the markets, at the headline indices are concerned, we were there what where we were a year back. So right now, the as I mentioned to you, there are stock specific actions that are taking place at the index level. We need to wait and watch for next couple of quarters to get a
Hmm.
earnings upgrade at this point of time. And also we need to consider the facts, how the geopolitical environment is, and how the trade wars have been taking place. So all these
Hmm.
parameters have been weighing on the earnings of the companies in the medium to short term. But despite of these
Okay.
medium to short term headwinds, we are quite sanguine with respect to the long term outlook of these companies and the earnings upgrades of
Hmm.
these companies. And we had a rating agencies upgrading Indian economy. The Fitch and S&P rating agencies have upgraded the Indian economy. That's going to reflect on the company's earnings in the next coming quarters, most probably.
All
So
right.
I don't say
For
Indian
the
market is
Yeah.
completely expensive. At the same point of time, they are not cheap.
Okay.
Go
All
ahead,
right.
Neha.
Um, so, as an investor, what do you think about the key risks that one need to keep an eye on for the next 3 to 6 months, globally as well as domestically?
Neha, how this tariff issue is going to be, it is one of the key
Hmm.
concern. Okay, that creates some overhang to the global investors. So investors need to closely observe. And as I mentioned to you, how the earnings upgrade, we have taken measures with respect to GST rationalization and and giving a positive momentum for the domestic economy. So all these things has
Hmm.
to translate into the earnings. That's where key aspect one need to keep on the radar. And going ahead, okay, how the earnings are going to translate in the coming weeks, that is the one of the key thing one need to keep in mind. And end of the day, it's all boiled down to individual stocks in their portfolio. So if there
Okay.
is a positive optimism in the individual stocks, because it is a completely stock specific market, Neha, so one need to
Hmm.
act in a very stock specific way. And also taking some profit from the table also in these kind of market, due to the uncertainties that has been looming in the market. There is nothing wrong taking some profit from the table, and entering in the market at dips also can be definitely one of the strategy. It is definitely
Okay.
buy on dips and sell on rally kind of a market in the medium to short term.
All right. Let's also talk about small cap valuations right now. Um, do you think that in the small cap sphere, there is froth building up right now? What is happening? What are your thoughts on small cap valuations?
Neha, with respect to the small caps are concerned, they have witnessed a strong resilience. In the previous bull markets,
Hmm.
whenever there is a consolidation in the market, the first segment of the stocks that get hit because of any kind of high volatility in the markets are small and mid cap stocks. But in this last few quarters, okay, small cap and mid cap stocks shown their resilience. Apart from some kind of here and there companies, there would be a froth or some kind of a miscalculations do come. It's a part and parcel of market market movements are concerned. But by and large, the small caps and mid caps, they have demonstrated a strong earning track record in the recent past. So as I mentioned to
Hmm.
you, in the small and mid cap space also, it is stock specific and sector specific in the medium to long term.
Okay. So we have reached the last leg of our segment in which we are going to talk about retail investors in depth. So for retail investors entering at these levels right now, what is the best strategy? SIPs, staggered buying, or sector rotation? What is your take on this?
Neha, I combine, okay, as I combine, okay, if the investors are coming for a time horizon of 3 to 5 years, definitely they can buy at every dip. Okay, market do gives those kind of movements. So buying
Hmm.
at dips is extremely crucial. If the investor
Okay.
find a good value buy, in those situation, one need to have a lump sum kind of investment. But definitely, it is
Hmm.
a market buy on dips in the medium to short term.
Okay. All right. The last thing I want to discuss is about sectors or themes you see offering the best risk to reward ratio over the next 12 to 18 months. What are your picks?
In terms of the sectoral picks are concerned, Neha, as you mentioned, 12 months horizon, auto looks very attractive to me.
Hmm.
We are yet to get the Kickstarter with respect to the festive season is concerned, with recent
Right.
reduction of GST is concerned, and also the domestic consumption and infra. Infra has been a laggard in the recent past. Most probably for a
Hmm.
1 year perspective, one can buy infra stocks. Their valuations looks very attractive to me. So stock specific infra stocks one can add, and also capital goods also can be added in a very stock specific manner. So these are the themes looks very attractive, and certain PSU stocks also one can add in terms of a 1 year perspective.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets live stream.
Thank you, Neha. Thanks for inviting me on your show.
Thank you so much. Thank you, everyone, for joining us today.